I'm Cesar Delgado from Back Roads of Illinois podcast. Welcome to the show with us. I am joining with Brian Hoops in Springfield, Missouri for Midwest Solutions.
Hello, Caesar. It is great to talk with you. I've been a fan of yours for quite some time since you
Thanks. Brian is an owner of Midwest Solutions and a markets analysis in Springfield, Missouri. Welcome to the show with us for today. My pleasure that you joined the show for today. Thanks.
Well, it's my pleasure to be on. I always look forward to what you have to say and the guests that you have. So anytime you want to have me on, I'm welcome to be your guest.
Let's go ahead to talk about the markets in today's close bell and the biggest cattle herd. It's extremely expanded to include all applicable to the central U.S. Could you tell to our listeners about this topic?
Yeah, the cattle herd has been growing and expanding over the last year. We had such tight supplies for some time, and eventually we replaced those tight supplies with not only more animals but larger animals. That's probably one of the big keys. Is last week's steer weights are record large at any time, 936 pounds. So you have cheaper corn prices. Combined with good growing conditions, good weather for these cattle to put weight on. And then you have that outlook going into the spring and through the winter months that prices will be better down the road than what they are today. And there's a propensity for these for farmers and feedlots to hold cattle back, put a little bit of weight on. And so we have a very kind of a bearish fundamental supply market at this time. With some rumors. Well, in the last week, we've heard rumors that China was buying U.S. wheat, and we heard it was hard red variety, and now 2 days in a row they've announced sales of soft red wheat, and that has spurred Chicago to gain against Kansas City and against Minneapolis on some spread type trade. We've also heard rumors floating around today that China has canceled 6 to 10 cargoes of Brazilian corn in favor of U.S. corn. And they are expected to switch those cargoes, and that gave strength to the corn market. And around midday, there was also some talk that China is once again buying U.S. soybeans off the Pacific Northwest using the price break that we had here recently in futures, with January soybeans testing the $13 mark. And we did see a little recovery off of that low as those rumors came out, and we'll be watching closely confirmation for those rumors in tomorrow morning's opening when the USDA office opens.
Good to hear that from China.
Yes, anytime we hear, our markets are so important. We definitely need to have China in them to to be an aggressive buyer of all of our grains, but also some of our beef and particularly our pork products. They are a massive buyer of U.S. pork as well as the grains, and our exports really are heavily dependent upon them.
What is your opinion on the corn yields for this year in Missouri?
Yeah, last year was an amazing growing season, 2022, record yields for almost all of Missouri, except for the southwest region. That was an area that had extreme drought. This year was a much better area for southwest Missouri, and that's kind of where we're at, about south central, southwestern Missouri. That area had incredible rains, incredible yields, and it was the central Missouri regions that really dried out during the heat of the summers. So, you go along I-29 along the borders with Kansas and Nebraska, Iowa, good crops for the most part in that area. The central region, where they grow a lot of corn, a lot of soybeans, some winter wheat, crops just did not get enough rain this summer, just too hot, too dry. So USDA certainly lowered corn yields in Missouri, and that was probably as expected. I think they probably have a handle on the final corn crop by now, getting fairly close to that 175 or 176 national average. Yeah, you look at the livestock markets, been very volatile in especially that cattle market. We've seen a heavy selling in live and feeder cattle futures. Part of that has to do with the softening fundamentals, the heavier weights of the cattle, a little bit more supply of cattle in the last several weeks, and then that has brought the cash markets down. The biggest thing in the feeder cattle market is the fact that the LRP insurance product, as feeder cattle prices weakened, a lot of the producers who bought this insurance level were looking to gain on that financially, and the insurance companies ended up selling some futures in an effort to try and keep their heads afloat, keep themselves solvent, and so that really pressured the feeder cattle probably more than fundamentally they suggest that they go. The cash markets for the feeders have not been hurt as much as what the futures have anticipated. That's reflected with the feeder cattle index up around 223, and that's a substantial amount yet from our current futures prices. So we're probably oversold and definitely due for some sort of recovery. A lot of it is going to depend on how much cash strength we can garner over the next several weeks in the live cattle.
Water.
Yeah, I love doing that type of a strategy, buy a put and sell a call. And I think there's some really big opportunities to do that in cattle this year. And there has been all spring and all summer. And there may be here through the winter months where we can do that same strategy, buy some at the money puts, sell a $10 out of the money call. It's probably not a great time to do that right now in the cattle market because we've broken so hard. In the grains, there may be some opportunities to do exactly that, where you do that in corn or soybeans or wheat, because the upside is likely limited by large South American crops.
Is there anything would you like to go to tell our listeners about January's report, because it is important for next year?
Yeah, you're right. It's almost the largest report of the entire year. One of the most volatile for sure, because you have the final, supposedly anyway, the final yield numbers from the USDA as far as corn and soybean production goes. You also have the first look at winter wheat seedings for this year. And so you get a real look at the production side of things. We'll also have some updated demand numbers from the USDA, world production numbers, and this is really the heat or the high point of the U.S. growing season or the world growing season down in South America. That's when we can really lose or gain yields, and so it's a very key report. That's something you don't want to miss out on as we go into. Well, great. I would love to be on again. Anytime you need me, Caesar, just reach out to me, and love to talk with you again. Thanks so much for everything you do.
This is Brian Hoops for Midwest Solutions in Springfield, Missouri. From back roads of Illinois, I am Caesar Delgado. Have a good day.